JJ the CPA here. Let's go. How you doing today? Hope you're doing well. Here's the deal. Why am I excited? Well, because I'm a CPA and I like keeping up with stuff, and boom, hot off the press, we have the new Form 7200. Yes, this is a big deal, especially for those that need to get this money. So I'm excited because there are many that have been waiting to get their advance on their employee retention tax credit for 2021. And they came out with a draft, which I did I had my seminar and I went through it, but I've been waiting to do this video until the version came out for 2021. So one thing I'm going to note to you right off the bat is that you go to irs.gov. You can search Form 7200, but when you go to this landing page, something that's interesting, if I click on the instructions here, they have not been updated to the latest version. So when you go to this landing page and you want to look at the instructions, make sure for now that you go to the PDF version, which is going to take you to January 2021. Now, I'm sure that any day now we will see that they've updated that, but wanted to note that to you. On the Form 7200, it has changed. The first thing I want you to note is that you no longer can file a Form 7200 for 2020. Why? Well, Form 7200 was due for 2020 no later than February 1st. It can only be filed before you file a Form 941. So this Form 7200 here is for 2021, can only be for 2021 because 2020 has been put to bed, if you will. The Form 7200 is a way that you get your advance on your credits before you file your Form 941. This applies for the employee retention tax credit as well as the sick leave tax credit and the family paid leave tax credit. The employee retention tax credit has been extended to June 30th of this year, so you get it for first and second quarter. The Family Leave Act or the Family Leave credit as well as the sick leave credit have been extended into 2021, but only for first quarter of 2021. Now, on this Form 7200 that I've got up here, we'll note that we now are able to mark first quarter. The Form 7200 last year was absent from listing first quarter. Who cares? There was a reason for it. It made sense back then, but they've updated that. What's interesting is that it does include the third and fourth quarter. There is not going to be the ability for you to file a Form 7200 for third and fourth quarter unless somehow they extend the law. So I think the IRS is just thinking ahead, but don't think that that now means we are able to get these credits into the third and fourth quarter. What else is new here is that when you're requesting the employee retention tax credit, you do need to enter in the average number of full-time employees in 2019 or 2020 if you were not in business in 19, and they're making note at aggregation rules apply. The thing to note here is that when you're looking at the number of employees, it is full-time employees only. It is not full-time equivalent, and it's full-time employees that you had in 2019. You were in business all of 2019, then you're going to take your average number of full-time employees in 19 to then know what rules apply for 2021. When you're looking at the full-time employees, it's those that worked at least 30 hours in a week. In a month, there's a 130-hour rule. You can go to the FAQs under the Employee Retention Tax Credit for more info there. But the thing to note is that for 2021, it is a massive, huge increase in the number of employees that you can have to get the maximum benefit of the Employee Retention Tax Credit, meaning 500 and below employees, those employers get to include all the wages in the quarter that they have a reduction in gross receipts, which for 2021 is only a 20% reduction in gross receipts threshold to then qualify for the ERTC in first quarter or second quarter 2021. And that is compared to the correlating quarter in 2019. There is an option to compare first quarter 2021 to the fourth quarter of 2020. You'll need to go and look at the FAQs as they update. Once we know more about that, I will do another video because the IRS even said more will come on how you're able to do that. But when you're 500 or less, you're then able to include all the wages of all employees. They don't break it out between essential or non-essential, if they were working or not working. If you're 500 or less, you can file Form 7200, because if you have more than 500 employees, you don't get to use Form 7200. And if you have more than 500 employees, you only get to include those wages paid to employees that were not providing services during the time that the business qualifies. Now, we also know the other way to qualify for the employee retention tax credit is if there was a partial or full suspension of operations. When you look directly at the law in Section 2301 of the CARES Act, it defines that suspension as a limitation on commerce, travel, and group meetings. You really need to go through the FAQs to really make sure that you don't qualify, meaning there's so many ways that you qualify. There's aggregation rules. I've got a link in the body of this video to a playlist talking about the credits, and I have a specific video about the aggregation rules. They're either going to help you huge or they're going to kill this deal on the employee retention tax credit. So if you're involved in the business with other owners that are in common, you need to take a look at that, because the net is wide in applying the aggregation rules, which it now is wanting you to specifically list. That was not there before. And so that is key. Now, when we're talking about the wages and the qualified wages and the qualified time, there is well over 80 FAQs. There is a ton of law that you need to look at. So I've given you some general information. You definitely need to, if you're looking at doing these credits, look at the details. And by the way, I've got a seminar that you can get immediate access to. I already did the seminar. You can watch the video. It's 2.5 hours long with a PDF of the PowerPoint that you can follow along. It's a deep dive into the employee retention tax credit. And you get immediate access to all the other materials, which include worksheets, Excel spreadsheets, examples, flow charts that walk you through how you're able to know what you qualify for, as well as a massive number of links that puts everything in one place for you related to the employee retention tax credit. So check that out. It's 5.5 hour seminar, because 2.5 hours I'm presenting, and then I take 3 hours of FAQs. And then also, when you sign up for that, it's $97. You also get a 1 hour video that's private, not on YouTube publicly, where I go through the ins and outs of the partial and full suspension of operations, limiting commerce, travel, and group meetings, because I think there's going to be more businesses that can apply for this and get this credit. Also, I've done a deep dive video that you need to check out that is public. You can find it in the playlist, that's talking about, well, can owners and spouses qualify even though the related individuals to a more than 50% owner cannot qualify for the employee retention credit? So there's a number of things that you need to be taking a look at, because in 2021, the tax credit is 70% of wages up to $10,000 per employee, as we had talked about. That's $7,000 deduction. What? $7,000, not deduction, scratch that, $7,000 tax credit. What? Per employee, and it's per quarter in 2021, meaning the $10,000 in wage max per employee is per quarter. So you can get up to $14,000 tax credit per employee in 2021, which is huge. Now, want to note to you, the Form 7200 is simply how you get the credit, as in the money, now. You fax it, you get the money within 10 days. It only can be done by fax. You're only going to get a paper check, but you still have to report the information on the Form 941. This is just your request for the money. On Form 941, you have to report the wages that you're using to then qualify it. There's a breakdown between the refundable and the non-refundable portion. So if you go to my seminar, I break that out in detail related to the 941, the 941X, as well as some provisions in the Form 7200. What I want you to note here is that this covers not only the employee retention credit, because I've spent a lot of time talking about it, but also the sick leave and the family paid leave, as I had indicated. And so if you are requesting an advance on the qualified sick leave or family leave, you do enter in the number of employees that you had when qualified leave was taken during the quarter. So there's instructions, and we do have the new instructions in the PDF form. But what is the same is you're just simply listing the credit. See, you're not listing the wages. You're not doing a calculation for the IRS on this form. You're just saying, here's my credit, and you can get it in advance. This is what many people don't know, is that on the Form 7200 right now, you could estimate what you believe your credit's going to be for the entire first quarter. If you're a business that has a reduction in gross receipts, or that's what you're anticipating by 20%, you can right now request an advance on that credit for the entire quarter of 2021. Now, in the instructions, I'll show you, it does indicate that you can't ask for more than an advance on a credit compared to what it would be if you were using first quarter 2019 wages. What? We'll see that in the instructions here. But you basically indicate what you want the credit to be, and then you're going to fax that in. That means also the IRS has continued to have a dedicated department to this. The one thing I do want you to note is that if you file a Form 941, which you have to, if you're an employer, there are all these other little exceptions. There's no reason to go through all of those because it's probably 0.10% of all employers, but nonetheless, you need to, on the 941, mark it. But what's key here is that you would list from line 2 of your most recently filed Form 941, line 2, and it's a way that the IRS verifies. So it's a very easy and straightforward form. The one thing that we know is that we know it's new because up here in the top left, it indicates January 2021. The reason I'm also pointing that out to you is that if you happen to be looking at a Form 7200 and somehow you've gotten your hands on the old one, make sure you're using the one that is January 2021. Now, on that landing page on the IRS website, as I had indicated, the instructions that are in text form have not been updated as of today. But if you go to the print version, which is the PDF version, you will see that this is the new instructions that match up. So just a few things to note when we go through here. Number one, I talked about it in my seminar. This does not have any new information to guide us related to aggregation. It doesn't have anything in here to guide us on whether owners or spouses are able to be included. This doesn't include anything that gives us any further information related to the interaction of the ERTC with the PPP. And there's nothing in here that gives us any further information related to the ability for an employer to use an alternative comparison quarter. I told you earlier that you can compare first quarter 2021 to fourth quarter 2020. You can't just do it that simply, okay? The IRS is coming out with some additional directions. All I'm saying is it is not indicated in this. So you definitely want to pay attention to one of the main things here is that if you're self-employed, you would only use Form 7200 to get an ERTC or an advance on the sick leave or the family paid leave credits on your employees. If you're self-employed, you get that credit for the sick leave and the family paid leave on Form 7202 that files with your individual tax return. And by the way, self-employed do not qualify for the employee retention tax credit. That is specific in the FAQs that the IRS put out. Now, when we just look at this, basically in the beginning, they're just letting us know that what I had told you earlier, the employee retention tax credit is only through June 30, and the other two credits, sick and family paid leave credits, are only through March 31st. So they're just driving that home. As it relates to this, it does then give you the information related to the new rules in terms of 2021, related to the 500 employees and talking about the 70% we see here. And then we have the 500 employees. If we're looking through this and you have any additional information, what's nice is there are links here that can, if you click on them, they'll, so if we were to click on here, it'll take us to the website. We can still see as of right now, it's 11 p.m. on the 3rd of February 2021. So the IRS still hasn't updated their FAQs related to the employee retention tax credit. But when we are looking at the instructions as well, we get a few clues for those that are curious how it works when you reduce down your payroll deposit, because that's another way you can experience the credit immediately, is that you reduce down your payroll deposit. So they go through a very nice example here. They also talk about how you go about knowing how to limit the amount of advance credit that you are taking related to the employee retention tax credit. It would be that if you have a lot more wages now, well, you can't take the advance on the Form 7200 beyond what your advance would have been if you were applying this to your 2019 wages. Let me be clear. This did not exist in 2019. Form 7200 did not exist. The family paid leave and the sick leave did not exist in 19. There is an employee retention credit for other disasters, so that has been around, but as it relates to this employee retention tax credit due to COVID out of the CARES Act of Section 2301, that did not exist in 19. But what I'm saying is, when you're determining, when filling out a Form 7200, well, how much can I get? Well, there's a limit, and the limit would be, what were your wages in first quarter 2019 times 70%? That would be, in essence, your max amount that you could get on the Form 7200. They talk about how to file, which is just basically faxing it. They're letting you know that you can't correct or amend a Form 7200. Why? Well, because this all comes to the final reporting on your Form 941, and that's where you would shore up anything. One of the things that's interesting too is that they make it clear that you're only going to be able to file a Form 7200 for 2021, but they also make it clear that when you are reporting anything on your Form 7200, that you need to further report it and reconcile it with your Form 941. And so basically there's some good information. I feel that they've expanded these instructions to give you some guidance. There's nothing new in here in terms of the additional information related to what we're hoping for some further guidance. But what is new in here, of course, is explaining the calculation of the credit for 2021, which is now the 70%. It doesn't go into really any detail related to the definitions of the qualified or the partial or full shutdowns. It doesn't go into any real detail talking about the gross receipts test and how you calculate that. It does give you information, and it does give you links related to that. So check this out. If you're filling out the Form 7200 for the first time, you'll note, if you've not filled these things out before, but any line item that you see here in the instructions, you're going to find a correlating description on that. And so anyways, wanted to give you the breaking news. It's breaking news to me. I was hoping that they would have had the Form 7200 for 2021 out sooner. It kind of makes sense that it got released today, February 3rd. They indicate January 2021, but there was no way it was available in January 2021. And it was not available yesterday, and it was not available this morning. But nonetheless, that is their date of updating all of this. So it just now has become available. I know that they kept the other 7200 in play because Form 7200 being filed in January typically and most of the time was still being filed related to 2020. So I did want to just note in the end here that if you are looking at getting any retroactive tax credit for 2020, whether it's the sick leave, the family paid leave, or the employee retention credit, which now it doesn't matter if you got PPP, you can take the employee retention tax credit, assuming, of course, you qualify. But with that being said, if you haven't reported those credits yet, you can't use 7200 as I already indicated. You should have already filed Form 941 for fourth quarter 2020 because that was due February 1st. So the only way that you will experience your credits back in 2020 is to file a Form 941X. You would not be able to use Form 7200 2021 to go and get retroactive credits. Also, when you go through these instructions, you will see that if you're going to claim any 2020 credits, they need to be on a 2020 tax form, which at this point, February 3rd, 2021, would only be a 941X. If you do go to the link here and you check out the seminar that I had put together, you will see that I go through a deep dive related to the 941X, how you can go about filing it for 2020, get that money. On the 941X, that is where you would indicate where your wages and the credit, and then do you get a refund. So even if your plan is to take your credits in 2020 and just use it as a carryover credit to reduce down your 2021 payroll taxes, you can't report it for the first time on a 2021 payroll form, meaning 2020 tax credits for payroll purposes have to go on a 2020 payroll tax form. And at this point, the only form that would be available to you is 941X. And what quarter do you file? Do you do it all in fourth quarter? Well, I talk about it in my seminar. I may do a video at some point related to that. But for now, we got the new Form 7200 for 2020. All right. Hey, thanks for tuning in. Listen, I should always ask at the beginning. I don't, but if you've made it to here and you're not a subscriber, I won't have my feelings hurt. Welcome. Love to have you as a subscriber. But I've given you some value. There's no way you hung on all the way to here and I didn't provide any value to you. So all I ask is that you take a second, you click it. I don't make any money off of it, but I love to see the numbers go up. Why? Well, I'm a CPA. And by seeing my numbers go up related to subscribers, lets me know I'm putting out good information. All right. Hey, thanks for tuning in. Love it if you'd subscribe. Subscribers, turn on your notifications, and then don't you ever forget, you've never met a CPA quite like me. All right. Have a great one.